Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, June the 14th. The year's 2020. Let's talk trading. It's time for the weekly open and gap. But as you all should know by now, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And remember, when you trade, don't lose any more than you're willing to lose on any one particular trade. And on the brain management side, do not do any of these. Okay, on to the weekly chart. And let's see. We've got some gaps filled and we've got some gaps that haven't filled. So the pound gap down and it's filled that gap. And we've had two red days, and as you can see right now, we are 9 pips above the open. So at the moment, we're green. And this is interesting. We're putting in the weekly range here, opening range for the week right here. Monday, first trading day of the week range. This is the last. Actually, this is the opening day for the month right here. So you see we dipped back in that area and we came back out. We're in that monthly inside bar from 2 months ago. We just above the weekly inside bar from 11 weeks ago. And we've got some new inside bar candidates this week. We didn't have many last week. And the daily range, it's still only what, 5.5 hours into the day, and we've got 4 pairs over 100 so far. You can see the daily low came within about what, 12 pips of the previous day's low. Pivot point here, so you take the buy zone trades till that pivot, then you can go short. But here, if you took that one, it looks like you got stopped out. And if you took this one here, you probably got stopped out again. So far you'd be 0 for 2 if you were taking every trade. But usually on Sunday, you probably wait about 3 hours to get the spread to settle down. Sometimes it'll shoot out and cover it, but usually the first couple of hours are pretty much no trade. And the rat, the range is too low. Pivot point. Let's see. Where's the monthly pivot down here? Weekly pivot 126.01 it looks like. Why does that say 125.09? We'll find out on the next chart. Here we got the weekly pivot 126.016. We've got a missed pivot from last week. No, that's this week. We got a missed pivot from last month. Right there. I'm not last month, but it was a few weeks ago, 2 weeks ago. We missed that pivot. Okay, we are in the wick zone and out slightly. And on the price action screen, as you can see here, it looks like we had some a red at the line was a trade, a green at the line, red at the line looks like maybe you would have scratched out there, green at the line paid. And right now this wall mall trade would have paid short at 20. And I've got a new screen for you. Now you might say, is that really new? And actually, this one isn't that new on the one hand, but what I did was I updated the indicator to show. So right here, if you're on the H1 range, it highlights it in magenta. But I've made another version of the indicator, because you see here we've got high, low, high minus close, close minus low, high minus previous high. It's got all these different options in the smart ranges here, all these different options. So I made a version that rather than giving you multiple um, bars worth of data, it gives you all the options. So, and I'll show that probably tomorrow. But here, what I did was I've got 4 versions of the TRO HL indicator, not HL5, but just HL, because this one has alerts on it. And sound the alerts, use a sound file, push alerts, mail alerts, pop up. And so we've got one for H1, one for D1, one for the month, and one for the day. And so anytime it's crossing one of those monthly previous period high or lows, it's going to alert me. Now, you might look at this and go, do I really need all of this stuff? You don't really need it. I mean, you could just take the breakout as they happen. But what this does is it gives you a clue. These are gauges, kind of like your dashboard on your car or the cockpit in an airplane. It'll tell you some things you might need to know. So for example, a high minus low right here is only 11 pips. So you can look at the last 4 H1 bars and you can see that usually it gets a little bit bigger. So there might be some room for this bar to go. So that's one clue. So if you're taking a breakout and it's only 11 pips, you go, hey, I might get another 7 pips or more. And that's on the H1 range. Now on the D1 range, look at this. It's 37 pips. It's at the 0 percentile. I mean, for the day, look at the last 4 days. Look at these ranges. They're all 100 or more, right? So what does that tell you? Price is probably going to range, right? It doesn't have to, but more than likely it will. And then on the H1, we've got the high minus the previous high. Okay, so we had a breakout 1 bar ago, only 1 pip. And we had a 7 breakout. And here they didn't break out at all. So you see this touched and it retraced. So maybe it breaks out, maybe it doesn't. But you know, there's some range to happen, but it doesn't have to. We've only got 22 minutes left in the bar. This just might be a small bar. And then on the low side, we haven't come near it. And you can see here, there's 3 pips. And then there was 23 4 hours ago. So what does that tell us? This basically tells you whether or not to enter the trade based on like say the range here, or it might tell you when it's about time to get out of the trade based on this one. So you know when you can start taking pips off the table. And then ditto for the daily, okay? Because on the daily, it kind of gives you a little bit bigger picture view. So we've got high minus the close and close minus the low. So this tells you, just like on the magnified market price, high minus close. So you know, hey, if we had enough range on the day, I'd be in the upper rat zone. Okay, so when this number gets say bigger than 20, you know that you're probably out of the rat zone. Just like this number is bigger than 20, so you're out of the green rat zone, and this is for the red. And that's how I use those. And one of the things that you can look at here, you see it put in a high on Friday. And then it came back down and it crossed right below this monthly high. You see it closed below, came above, and it closed below again, and the rest was history. So that's just kind of reading the price action. And once again, if you guys remember what I've taught you in other videos, when you see price at a top, you see a bull candle closes, a bear candle closes, you can go short. A bull candle closes, a bear candle closes, you look for those price terms. So down here at the bottom, came down here. Well, actually, let's look at this one right here. This was at the bottom at the time. So you had a bear candle close, a bull candle close. It didn't break the high. It came back down. Bear, bull, it broke the high, and you were off to the races. Bull candle, bear candle, it closed. You can go. It didn't make a new high. Didn't close above a line, or actually, it couldn't have closed above the line. It'd be pushing that line, so it didn't make a new high. And then all of a sudden, boom. So, price action. What is price action? What's price going to do? If you look at this candle, it didn't make a new high. It didn't make a new low. So it didn't break out. This candle made a higher high and a lower low. It broke out on both sides. Okay, this candle broke out on the upside only. This candle right here broke out on the downside. That is price action. Price is going to make new highs and lows, and it's going to reverse off those highs and lows. So from last week, there was, or the Friday, there was the high, there was the low. It made it, it reversed off of it. That's price action in a nutshell. So all those new traders, and welcome aboard, new traders, to the to my YouTube channel. Welcome to the Facebook page. Welcome aboard. Feel free to ask questions. So back to price action. You see this pattern at the bottom, because if this is the price action of price turn right here, and at the lines, it either closes above a line or it doesn't. Now you can say, well, what about closing below? Well, if it doesn't close above, then it closes below, right? Unless it closes right on the line. But I think you understand what I'm trying to say here. It either crosses and closes above or it doesn't. That's simple. There's nothing more to it. I mean, you could even sum up price action with that one thing. Price either crosses and closes above a line or it doesn't. It didn't cross the line. It crossed the line, but it didn't close above it. That's it, right there. It crossed below the line, right? That's simple. So if price is moving up, it either crosses and closes above. If it's moving down, it either crosses and closes below or it doesn't. That's it in a nutshell. I mean, there's no fancy indicators you need. In fact, I watched a video on one of the trading channels there, and this guy started talking, and I had high hopes because he was drawing horizontal lines, but he just kept drawing all these lines, and he was talking about all this esoteric stuff, and it's like, it was painful to listen to, because why are people complicating it? Somebody goes, well, isn't this complicated? No, this is simple math. It's one level minus another level. That's it. It's not even division. This is simple. Oh, well, of course, you have to divide to get the percentages, but I mean, come on. This is really simple stuff here, So let's not complicate it. Remember, for the rest of this month, all we're doing is we're just going to look for these high-low breakouts. Are we going to win every one? No, but we're going to win more than we lose. And all you have to do is look at these. And look at these. Low breakouts, high breakouts. The minus numbers mean it didn't break out. The positive numbers mean it broke out. So remember, fellow traders, when you're trading this week, it's not what you trade, it's how you trade it. So get out there and drain the banks. And new people, click subscribe, click like, click share. Thank you.